Today we have a special guest talking with LaCour. He's well known in the Los Angeles area. He's been to these events. You know, he was at Crypto Investor Summit, which is now a Blockchain Week. He is on the main stage back then with some heavy hitters talking about Bitcoin, talking about what was going on way back when it was sub 10,000 and people were still on the uptake. I can say with confidence that this guy has me comfortably beat being into Bitcoin since 2011. And then, you know, people that I know in the Los Angeles ecosystem and traders that I respect know of his platform and know that he's bringing some knowledge bombs to the Bitcoin ecosystem. So I'll just say, hey, how's it going, Russell?
Thank you so much for your kind intro. It's going great. I'm excited to be here today and talk a little bit about Bitcoin and algorithms and, you know, not only what we do, but, you know, how algorithms can help you as a trader or as an individual in this market, how the innovations in our ecosystem are more or less very bullish for Bitcoin. Everything going on in Bitcoin right now is very bullish. We were just talking about GameStop a little bit before. And the ability for people to now move into this market and see the need for a decentralized financial ecosystem, for decentralized exchanges. It's an exciting time to be alive and to be a part of this space. So thanks for having me on.
My pleasure. Yeah, I know that more and more platforms like FTX, they're offering they're trying to figure out ways to introduce people to like algorithmic or more complicated trades that use different variables. But I remember, you know, I guess it would have been 2 years ago on the main stage. Yeah, you were dropping those knowledge bombs and clearly showed to the audience of several, hundred people, essentially what some of the fundamentals are. So how would you, for someone that knows a little bit about Bitcoin, but doesn't really know it on the high level, you know, using variables, what is that essentially that you do?
So there's two main things when we look at trading. So like we do algorithmic trading. The best way to think about it is like, I'm not clicking a button to say buy or sell something. I've actually have code that's executing whether it should buy or sell, and it's actively managing a portfolio of assets. So for us, we're actually denominated in Bitcoin and Ethereum. So we're actually actively trying to make more Bitcoin and more Ethereum rather than a normal algorithmic fund, let's say in the stock market, that's actively trying to make more US dollars. So for us, there's really two ways that you can look at algorithmic trading. I'll start with the simplest way to understand it. And it's that an algorithmic trader is basically a service provider to the market. You are saying that I'm willing to buy and willing to sell at the same time and providing liquidity for people to get in and out of their position. So that's called a market maker. And a lot of people talk about market makers like they're manipulating the market or whatever it is. But for the most part, a lot of market makers are just trying to make a little bit of money by providing you the opportunity to market sell your favorite shitcoin or whatever you want to do. So really, we do a lot of kind of liquidity providing is what I would call it, where we're either providing liquidity to someone who wants to borrow or someone who wants to sell or buy. And then on the other end of algorithmic trading, you might be taking a more probabilistic stance. So it's like you bought Bitcoin because you thought it was going to go up. So you could write an algorithm that based on some set of criteria would buy or sell because they think it's going to go up. So I started out thinking that I could trade the stock market. This was about I feel old. It's probably 7 or 8 years ago now. But I very quickly lost all my money and realized like I have too many emotions and these emotions are getting in the way of making good trading decisions. And so I was a software engineer by trade, and I realized, okay, I shouldn't be trying to make decisions that I can mathematically define. And so from there, I began to automate my portfolio, so to speak. And things have just kind of rolled uphill, or if you want to call it downhill from there. And then we ended up here.
It seems like a lot of the whales that come in and out are using the bots in some capacity.
Absolutely.
It seems like, I use FTX and some other platforms, but it's like, if you're a trader, you would want movements to be swift and aggressive. And I think a lot of these platforms that are doing that essentially rely upon bots. Do you feel like institutional traders exclusively use bots, or is it something that when you got started with it, like you were one of the first few and you had to introduce people to bots, or how did algorithmic trading kind of enter into the crypto ecosystem?
That's an interesting question. Well, we'll start with like the beautiful thing about crypto is that it's actually tech native. So a lot of the OG traders were also developers that were algorithmic developers. And one of the things when I first went down the algorithmic rabbit hole is that people have been doing this kind of stuff and very advanced, like insanely advanced algorithmic trading for 20, 30 years in the stock market. Like this is nothing new. And those people are managing billions, if not trillions of dollars in the market. And like you said, it's actually very easy now. And there's a company called 3 Commas that does it. And there's many other platforms that an institutional trader can pay, $30 a month and set up every hour I'm going to buy, $1,000 worth of Bitcoin. And so see these funds that want to get, let's say, a $10 million position, nobody's going to go market buy a $10 million if that's their whole position. They're going to go in slowly over time, get an average cost, because it's such an emotional thing to just, now's the time that I want to buy, like we saw it with Michael Saylor, what he purchased over $1 billion worth of Bitcoin over a period of time. You can't market buy $1 billion worth of Bitcoin. I don't think there's many things in the world that you could market buy $1 billion worth of.
Yeah, I think what's most interesting about the GameStop angles, we learn a little bit about how Robinhood and some other places will sell order flow and like offer the ability to like front load for a certain amount of the denomination. So it seems like these, as you say, like the high frequency bettors or the bots that orchestrate whatever the betting philosophy of that hedge fund might be, or that family office, and then kind of see it through in a dispassionate way so they don't get kind of emotional about it.
Exactly.
It seems like, just in my own experience being wrecked many, many times over, that taking emotions out of it and it just leading with your philosophy is kind of the best way to go. Has that been kind of the core belief behind like investment at your place? Because I know you guys have scaled up nicely over the years.
Yeah, when we first started, see, like you said, I've been mining Bitcoin since 2011, and when I'll give my backstory very, very briefly because it's much longer than I wish. So I was doing a lot of software development and I was just kind of fed up with it. I was building products that the world didn't need. And so I ended up finding myself in India, just searching for the meaning of life. And while I was there was actually when Bitcoin was running to 18, 20,000 the first time. And it kind of like reignited my passion for Bitcoin and showed me that like, we do have an opportunity here to build a better world and a better future where finance can be decentralized and can be, because in the beginning it was so like hope and pray that this is going to happen. And then when that happened, it was like, oh shit, the world is now watching. We're on CNBC. This is a big deal. Like it could really actually happen. And so that happened. I got back from India and I found myself at a hedge fund, Block 26, and basically said, hey, I've been doing algorithmic trading for, I think it was 5 years at that time, and I can do this in Bitcoin. I want to start a Bitcoin denominated algorithmic fund with you. And so from there, we basically focused only on making Bitcoin. Like we didn't care about making dollars. We just, let's make more Bitcoin. And with that in mind, we pushed forward, and basically the ethos became this whole idea of we're going to change the way that people denominate themselves. So instead of being denominated in an inflationary currency that basically stripped you of 30% of its value this year when you had zero say in it, you can now be denominated in Bitcoin and operate in Bitcoin and invest in Bitcoin. We're also offering that in ETH too. I know a lot of people think ETH is a shitcoin, but personally, I believe there's a lot of innovation happening in Ethereum that I hope one day comes to Bitcoin.
Yeah, I know that like during the years, even when Ethereum was getting going, that the spread between a lot of the bid and asks before they had automated market makers was huge, and you could like arb between different exchanges. And I think a lot of those days are gone unless it's like a brand new token or something. You're going off chain to on chain or something along those lines. But when it comes to trading itself, are you more guided by you're looking at fundamentals for Bitcoin and for some of the bigger coins, and then kind of having that be your northern light, or kind of where do you focus?
So the best way to think about it is when we decided to be Bitcoin denominated, that was basically us taking a long position on Bitcoin. We're basically saying 5 years from now, 10 years from now, we very much believe Bitcoin will be higher than where it is today. And we're seeing that come true. I mean, when we started the fund, Bitcoin was trading at 10,000. We saw it go all the way to 4,000 multiple times between now and then. And now we're trading north of 36, 37,000. And when we developed our system, we always said, we know that this is the future and we're willing to stake everything on it. Like, I think, and Joe McCann's going to kill me, but I just did a podcast with Joe, one of our quantitative advisors, and he always talks about being responsibly allocated, because I think a lot of people, mortgage their house and buy Bitcoin. I'm very irresponsibly allocated. Everything that I own, my life, my savings, everything that I have is in Bitcoin and Ethereum, because I don't believe the world will. Let's put it this way. If Bitcoin and ETH don't work out, I think we're going to live in an apocalyptic society, and I'm going to have other problems than money. So I'm very much betting on them, because if they don't work out, I think we're all fucked anyways. So I hope that answers your question. We're very much long Bitcoin, and the way that we built our strategies was basically with that in mind.
Yeah, well, I think really like the pandemic and remote work really put, I think, crypto in general on, center stage, and with all the memes, the printing presses go burr, and then decentralization and uncertainty in the markets, it seems like really pushed up Bitcoin as a storage of value. And, Pompo always likes to say that the market kind of determines which ones are going to have staying power. And then Bitcoin, 70% of the total crypto ecosystem in terms of value. So I think the market quoted that Bitcoin in itself is really the high flyer there. And then even from 10 years ago, it's kind of like the Bitcoin, once you read that white paper, it grabbed you in a way that a lot of the other technical documents out there kind of didn't, is what you were telling me, right?
Yeah. Well, see, I go back and I think I read the white paper a few times a year. I don't think I've ever been more bullish Bitcoin, and it's not because of the white paper. It's actually because of the. There's actually a really good book. I'm gonna plug it for you. It's by Nick Bhatia. He actually was another advisor for Tantra Labs. He wrote some content for us. He used to trade like bonds in the stock market, and so it's all about how in the future governments will put Bitcoin on their balance sheet, because for the first time we have a currency that has no borders and that can't be controlled. So see, when all these governments around the world have liabilities priced in US dollars, and the US government prints 30% more dollars in a year, that's a big fuck you to everybody in the world. And other countries like China, like the United Kingdom, they're not happy about that. They're not, of course, they're not going to go out on the news and say, this is a big deal, because they don't want to frighten people. But we're very much seeing an unwind and an unpeg of the US dollar as the global reserve currency, and we need a new one. And it's going to be a very hard argument for any government to say, oh, we should use the yuan over the US dollar versus a more decentralized one. And this isn't something that necessarily is going to happen overnight. It very much might take a few decades to get to this point. I think some more bullish people might think it's going to happen within this decade, but to begin to have the entire world put Bitcoin on its balance sheet makes sense logically when you look at the fact that it cannot be controlled by any one individual and cannot be manipulated. No more can be printed. And so I think that we're very much in the beginning still of watching this thing explode. Right? We're so early, and I think a lot of again, GameStop being a perfect example, a lot of the use cases of cryptocurrency and Bitcoin are really coming to surface now. We saw it in 2020 with the amount of money that was printed. Now we see it with the amount of, oversight and overreach that's happening in the financial markets. And I think soon enough, and again, it's already happening if you have the eyes to see it and the ears to hear it, that the unwind happening in the global currency market will very much come to Bitcoin, and we're already seeing it happen. So I'm excited for multi-million-dollar Bitcoin.
Well, you'll remember, it might have either been the conference that you were on the main stage or the one after, but Tim Draper did his opening speech, his keynote, on how he was taking a bunch of meetings in South America with their leaders and talking about how that could be a solve, essentially a balm for their rapid inflation in a way to like kind of stabilize things. And then, yeah, Winklevoss is meeting with the mayor of Miami, and he's FOMO into it. And I remember what two things stuck with me is, one, he talked about how smart contracts can render a lot of accounting and law like obsolete, like it can do a better job with it being not binary. And then two, that whole Bitcoins will be owned by like countries or states as opposed to individuals. So I guess the takeaway there is that when you have high level people, FOMOing Bitcoin, I think that the narrative continues, right?
Well, I think the best way to look at it is like if we look at Bitcoin's supply rate right now, at $100,000 Bitcoin, it's about, I think it's 30 billion a day, I think is the number. So you basically need $30 billion a day in volume to support $100,000 Bitcoin. And so it's a lot of money. But then you look at the government's about to print $1.9 trillion. So is 30 billion really a lot of money to a government? Not really. And so especially, I always use this analogy. Like I love the gold analogy. Like I very much think Bitcoin replaces gold. And at that rate, we have a $300,000 Bitcoin. But look at the price of a hamburger 50 years ago. You could go to McDonald's or whatever local fast food and buy a hamburger for 20 cents. That same hamburger costs you $5 now. So the price of inflation at that point was literally 25 times over 50 years. So all things considered, let's say Bitcoin doesn't move an inch in price or bullishness, no more people decide to buy, inflation alone will drive the price of Bitcoin up 25x over the next 50 years. And that alone is enough for me to buy Bitcoin. You don't even need to pitch me on governments putting it on their balance sheets, all of the innovation happening on Lightning, all of the layer 2 solutions that are coming out, how we're pegging assets, how we're decentralizing the financial markets. Like the future could not be more bullish. And that's very much why we chose to be denominated in it, because I'm not trying to get left behind as the government prints dollars endlessly.
I love how even projects, like Ethereum, they'll wrap Bitcoin. So it's like all these projects that have any sort of traction, they're still giving deference to Bitcoin, and it's kind of acting as a stability for their own projects. But for people that are just into it, are into it for a year or two, not a decade like yourself, and feel like it's kind of in over their head, like where can they find more about your company and kind of what you do to essentially automate a lot of this for people that want to get a stake into it somehow?
Absolutely. The best place to find us is tantralabs.io. That's TANTRA labs.io. So Tantra, if you've ever heard it before, a lot of people think tantric sex. Tantra is a technology. So we named our company this because we're a technology company, and we're trying to build technology for finance that helps people basically be denominated in a new asset. So we offer 12% on Bitcoin and Ethereum. We're basically, I would look at it as we are a hedge fund for the people that is offering a debt product. So because of the financial regulations in the United States, we decided to go with a debt product because it's not easy for you to just give someone money in the United States unless you're an accredited investor with millions of dollars. And so we were serving them for 2 years, and we decided we wanted to open up to allow more people in, allow more people to get exposure to Bitcoin upside more than just the dollar amount, but actually to earn more Bitcoin.
And that 12% is denominated in BTC on the other side as well.
Yeah, so you'll earn 12% in Bitcoin no matter what happens. So Bitcoin goes up to 100,000, you'll have 12% more Bitcoin. If we also offer it on ETH, so ETH goes to 10,000, you'll also have 10% more ETH. And yeah, it's fun. It's fun to watch that.
That's exciting. I know that people that are, trying to toe the line a little bit, they'll even get some downward protection and will use some of that to, limit their going long, if they go deep into a fund such as yours. So it's just interesting to see with decentralized finance, kind of how it all comes together. But, and it's great that shops like yourself will cater to the individual investor, where in Greenwich and Southampton, less one-on-one to these types of sophisticated trading that your experience has made commonplace for your firm. So I appreciate you being on the show. And then, people
Absolutely.
be sure to check out Russell's company and Bitcoin all the way.
Yes, all the way. Thank you so much, Rob. Thanks for having me. Have a great day.